Welcome back. Well, this week earnings season takes center stage as markets eye company earnings in the U.S. and interest rate decisions from central banks. Joshua Mahony, chief market analyst at Scope Markets, joins us for a preview of the global economic week ahead. Thank you so much for your time, Joshua. A lot that happened over the weekend, but also a lot that is coming up. Let's actually start off with the U.S. tariff exemption that's been placed on tech and electronic products. How much of a difference does this make to markets and consumers?
I mean, in my mind, it makes a massive difference. And the reason for it is this. Look, ultimately, this makes up around 30% of the imports from China into the US. And of course, 145% tariffs, it's absolutely huge. But it points towards a direction of travel that is away from higher tariffs, and certainly following on from last week where we saw the so-called reciprocal tariffs aborted for all countries apart from China. Now we're seeing 30-something% of Chinese imports being taken off that list. Really, it feels like Donald Trump is coming in for quite harsh lessons when he realizes the repercussions of these plans that, of course, he's implemented, but it feels like he hasn't done the research on what the repercussions are going to be. And certainly whether it's the markets in terms of the bond markets, which taught him a lesson last week, or whether it's these tech companies that are showing him exactly how much this is going to hurt their bottom line and their inability to be able to make changes swiftly. Certainly Donald Trump may have to do more in the near future to stave off a crash in other parts of the economy as well.
Yeah, and what's interesting about this is that it's also not permanent, it's also temporary. And I'm just wondering, because I mean, the whole point of this is for these companies to move manufacturing to the US, but that is not going to take 90 days. So could the markets maybe be pricing in a longer exemption period?
Yeah, certainly there's a feeling that this is not going to be 1 or 2 months. This is going to be something that essentially gives them time to form an agreement with China, come together some sort of trade deal. That may or may not be the case, but there's a good chance that even if we fast forward 1 month, 2 months, that soon enough they'll roll it over anyway if they realize the kind of repercussions. That there's a reason why they enacted it in the first place, right? And ultimately they are hindering businesses in the US in a very meaningful manner. And so they're pulling back these ones, but you know, who's going to be in Donald Trump's ears next to tell him the need to do so for another industry as well?
Yeah, well, US earnings season has kicked off, of course, with the big banks giving us earnings beats. And I mean, when I look at it, I mean, we saw really good trading and optimism in the market. So I'm not surprised by what has fueled, these earnings from these companies. But I'm just wondering, is this not the lost of the good times at this point?
Well, that's the thing. I mean, look, ultimately markets are driven by, yes, the underlying numbers when it comes to economics and when it comes to earnings, but also they're driven by expectations of the future. And certainly where you have an earnings report that comes out and they say, look, everything's great, we're beating on earnings, we're beating on revenues, you could just leave it at that. But generally people wait to see what the CEO's saying and what they think is going to happen in the future. None of them particularly have a great survey of the outlook for the economy right now. They may or may not be right, certainly any of the pessimists out there, because for all we know, we could see trade deals struck within the next week and all of a sudden everything's back to normal. But certainly as things stand at the moment, we have a great degree of uncertainty looming over the economy. And if you can think, businesses generally work many years in advance when it comes to investing in different things. You know, if you want to build a new plant, if you want to invest in new workers, things like that. If you have complete uncertainty as to the costs of your inputs, as to the size of your export markets and the trade relations globally, you're just not going to invest. And so businesses are likely to have a pretty dour outlook as long as these tariffs remain in play and as long as there is a threat that we're going to see ever higher tariffs going forward.
Yeah, and of course the EU has also been in the US's firing line. The ECB does meet this week. They'll be giving us their latest interest rate decision on a Thursday. And I'm wondering what wording you are expecting from that, particularly when we look at the economic outlook from here on out.
Yeah, I mean, look, certainly when you're looking at inflation for the likes of the Eurozone, and this is also pertinent when it comes to China, you know, the countries that have controlled their inflation to a better degree, are standing in a much stronger position when it comes to having the Federal Reserve or the central bank essentially come to the rescue of the economy. If we do get into a trade war, the ECB expected to cut rates, whereas the Federal Reserve are having to be patient. And that's because whilst both of them know that the uncertainty around the economy right now is going to be a hindrance, not all of these central banks are in a position to cut interest rates, and certainly that's notable of China. Inflation is pretty much non-existent, so if they have a trade war and prices go up, it's not the same as if prices are already running relatively hot and above target over in the US. So we're expecting to see a rate cut this time. We're expecting to see another rate cut in the next meeting. We're expecting to see 3 rate cuts by the year end for the ECB, and certainly for the time being, it's all about being data dependent, and certainly as long as inflation's low, it does also allow them to be relatively preemptive in their approach.
All right. Well, we will be hearing from Christine Lagarde on Thursday. Thank you so much for your time and for your insights there, Joshua. That was Joshua Mahony, Chief Market Analyst at Scope Markets, with the Global Economic Week ahead.